Hey guys, so today I'm going to be talking about this stock called Xpeng. It's basically an electric vehicle manufacturer, and I'll be going pretty deep into how Xpeng is a stock that all of us should be having in our portfolios as retail investors. And I'll be making a brief presentation of about hopefully 20 or 25 minutes where I walk you through how good the stock is and risks associated with the stock, and generally like what are the points that you should consider once you invest in the stock. So I'll quickly share my screen, um, and um, so yeah, a few disclosures beforehand. So this is not investment advice, okay? Like, I'm not a registered financial advisor or an investment advisor, and I advise you to do your own research before selecting or picking any stock and deciding how your money should be allocated. At the time of presenting this to you, I do hold this stock in my personal portfolio as well. And this presentation has basically been made for the benefit of investors, of retail investors like ours, who do not have the time or energy to deep dive into good companies, and also benefit from research that is detailed and that is often sort of like a monopoly of hedge funds and mutual funds, because they have an army of analysts tracking these things, right? So I'll continue with my presentation. So, firstly, like, um, what is Xpeng? Xpeng is a Chinese electronic vehicle company listed as XPEV in the New York Stock Exchange. It primarily sells its cars in China, like more like all of its cars are currently sold in China, though it has a very nascent export market in Norway, and in it's trying to build inroads into European markets as well. Now, why I feel this is a very good investment is because it I see the potential that this company can become the number two player in the electronic vehicle space after Tesla, right? And the amazing thing about electronic vehicles is that it is going to displace the internal combustion engine um, in a couple of in like 5 or 10 years, or max to max like 15 years. And because the vehicle market is so huge, there is going to be space for so many players to come in and get market share. So, for example, even in the internal combustion engine, even though, say, certain vehicles are much better than others, you still have the likes of Honda, Toyota, Volkswagen, and so many of these players being hugely profitable whilst at the same time competing. So it's not like Tesla is going to eat up all the market in electronic vehicles. It's going to be steered and segmented. And I think Xpeng is uniquely positioned to be the number two player in this. And this presentation, the whole point is to provide some insights that are not as well highlighted in the mainstream print or the TV media. Um, and hopefully it'll give you insights that, how other critical factors play a very important role. Now, how we can set up this presentation is I'll broadly talk to you about six uncorrelated factors, or not as dependent factors, all of which contribute to Xpeng being a great investment. So if you have five or six reasons that are independently going to provide tailwinds to a company, um, the revenues and the profits of the company are not only diversified, but they also ensure that the company has a um, long life. Its longevity is high, which means when you value a company, and if you have longevity in that company, the valuations are going to be obviously much higher. And the fact is that if you have five or six uncorrelated factors, even if two or three of them do not work, the other two, three will take care of the company and will propel the company to grow by a lot. And this, I think, is always a sign for a good investment return in the long term. So, for example, if you look at Amazon, Amazon had five or six things going on for it, which made sure that it was a very good investment. So the whole advent from online to read from brick and mortar to online, their investments in technology, the fact that they're able to build a global presence, all of these three four factors played a huge role in Amazon being the great investment pick that it has been. And over here, I'll discuss 6 factors which I feel are very, very positive for Xpeng. Now, the first and the foremost thing about automobiles, I think, which people often forget and which people tend to discount very easily, is the price of the vehicle. And given that the car is being made for Chinese consumers essentially, and China being still an emerging market and having a burgeoning middle class means that price is going to be a very sensitive point. And over here, I easily see that when you compare Xpeng with the main 5 or 6 players in the electric automobile space, Xpeng's price range is much, much lower. So if you take, for example, Tesla post subsidy, like the Model 3 is for about $36,000. Um, and as we know, right, Tesla is targeting the more elite, the more premium segment of the market, whereas Xpeng is really going after the middle class, where the volumes are. So it's trying to play a longer game here. And why I think it's even better is that electronic vehicles powered by artificial intelligence require more and more data. So the more consumers you can target, the more the faster your data becomes better, and the more data you have incoming for your AI software to analyze and process, and for your machine learning models to become slightly so better incrementally. So I think this is a great asset that Xpeng has, that because it's targeting the middle class market, um, it will have more consumers, and because more consumers will drive their cars, they'll have more data, and they keep refining and perfecting their car, which means they'll have a better navigation guided pilot, they'll have better self-driven cars, and so on and so forth, right? So Tesla is clearly competing in the more premium market, whereas in sort of the middle class and the cheaper markets, you have other companies like NIO, BYD, Li Auto, and we can see from this slide that Xpeng's price range is much, much lower. And mind you, like these prices are pre-subsidy and not post-subsidy, and the reason why I've highlighted that is because the pre-subsidy price is essentially what the company is offering in a competitive term, because that price is most reflective of how efficient their internal factory processes are, or how efficient their internal software is. Whereas post subsidy is something that you rely more on the government. So that's something that is more out of control for the company. So that's the reason why I've provided pre subsidy prices. And over here, we see Xpeng is clearly beating the likes of NIO, BYD, and Li Auto. So that's the first reason why I feel Xpeng is really solid, especially because automobiles is a product category which is pretty price elastic to demand, which means customers are really sensitive about price when it comes to automobiles. Now, the second criteria, I think this is something I picked up by listening to Monish Pabrai's YouTube videos. I think if you haven't looked them up already, you should. He's an amazing investor in something, and someone who has really unique insights on how you can invest in a company. So he has this criteria of what is known as a spawner, right? So a spawner is essentially a company which constantly tries to innovate, experiment, and rolls out new product lines every time, or like in every 2 or 3 years, or every year, for example, they have newer and newer products. So the logic is that you throw 100 darts into the wall, and like 4 or 5 of them will stick, 95 of them will fail, but the ones that stick will more than make up for the ones that don't stick. And this is where I see Xpeng being a spawner, where because it has so many things aligned with its car, it can potentially create newer and newer revenue streams. And if you create newer and newer revenue streams, you're enhancing the longevity of the company, and you're diversifying revenue streams. Now, something that Amazon has done, right? Like Amazon started off as a bookseller, as an online bookseller, and then it ventured into e-commerce, and it tried new things. It tried the Fire phone, which failed miserably, and Jeff Bezos talks very candidly about how it failed. But he says it is because of this culture of experimentation and this culture of innovation that they could have Amazon Web Services, which today contribute 60% to Amazon's revenues. So Xpeng, in that sense, I think, is also a potential spawner, because firstly, it can monetize its artificial intelligence software suite, because it's just collecting so much data, and it's collecting such relevant data and data in different dimensions. So it's not just about uh, the car passing through the road, and you're getting data intelligence of how roads operate in China, but it's also about how consumers or how an average person interacts with the car. It's about how are they using the internal AI, how they're using the internal AI chatbot, or how are they using the internal sort of voice system, voice command system. So that generates a lot of data. And Nassim Taleb, if you read the book Anti-Fragile, right, he says anything that gets better and better with time is usually anti-fragile, in the sense that it thrives on more and more variation and shocks and chaos. And this is where I think the AI software is really going to be a game changer. And this is something that Kathy Wood of ARK Invest has also spoken about, that these softwares are going to be so smart and so well monetized into the future that they can be independent revenue streams. The second is the navigation guided pilot, right? Xpeng can easily sell the intelligence, the data it has on self-driven cars to other companies, or even, for example, to airline companies or railway companies, or um, a host of companies that are looking to expand in the transport sector. Now, this may seem far-fetched, but the fact that it has something so unique implies that it can monetize it. The third and fourth points are something that Tesla is also trying to do, have its own version of robo taxis, where you're essentially replacing Uber. You're essentially not having drivers, and you're operating a taxi fleet. Um, and they're already sort of experimenting with this in a lower scale with Pengster. So I think this is also an exciting space to watch out for. And the last being the battery as a service, or charging as a service. Now, in a couple of next slides, I'll show you guys like how uh, Xpeng is like growing its charging infrastructure from something like 130 stations to what, 500 stations within a year. And over time, uh, as customers become more glued and uh, they become more stuck to the product, Xpeng can really use its charging facilities as a revenue monetization sort of scheme, right? Where you're saying essentially that, hey, you're saving on fuel costs, and you're using charging as a service, so might as well pay us up for that charging service. And I feel electronic vehicles is something that the more and more you use it, um, the more entrenched you become in being comfortable with a particular brand. So it's like how Apple's iPhones have a very high retention and a very high stickiness rate. I think it's going to be the same for electronic vehicles, where if I've used an Xpeng or a Tesla for 4 or 5 years, I'd want to stick with that company, because shifting to another electronic vehicle would mean that a lot of the processes, a lot of the ways in which I interact with the car suddenly changes, and I don't want to undergo that mental strain of having to adjust between cars. Um, so I think because other electronic, and this is an important point, and I've made a separate slide about this later on, is like, because Tesla and Xpeng are the only ones who are essentially building their car around a core software rather than building software around a core car, is why these two companies are potential spawners in this space. Now, the third sort of important reason I think why Xpeng is really top notch is because it's a smart electronic vehicle. Unlike other electronic vehicle companies, it's mainly built like the software is the main thing and the car is ancillary to it, rather than the car being the main thing and the software acting as, like a side sort of thing, or like providing more delight or more pleasure, or providing a greater customer experience. It's more about the software. Now, for example, during COVID, Xpeng launched soft over the air software upgrades, where it said that, if you close the window, the car is essentially going to heat itself a little bit so that the germs or the virus can be killed. So this sort of smart over the air software upgrades are extremely unique and extremely powerful in the long run, and just ensure that you're differentiating your product much more with customers. The second thing is it has full automated parking. Its NGP Xpilot 2.5 is pretty insane, and it has a high retention rate of 50%, which they said in in the quarterly earnings call, in the most recent quarterly earnings call. Um, they're using lidar technology very soon to further enhance um, their capabilities of self-driving and to make the car smarter. And they also have cameras and sensors all over the car, and like their AI powered infotainment systems are something that keep getting better as time goes. So they're essentially software engineers. Like Xpeng, like the founder, the top management, and like all of these guys are essentially software engineers rather than being like essentially mechanical engineers or building cars. So it's basically the software that's driving it. And I think no other like Neo or like Li Auto are like uh, have the kind of software capabilities that Xpeng already has. And mind you, software is an anti-fragile game where the more time passes by, the bigger players keep getting stronger and stronger, and it becomes that much harder for the number 3 or number 4 players to catch up. Um, and another thing I'd like to highlight is that I'll post 3 links in the video description of like reviews of the Xpeng, and all of them, like all of these 3 reviewers, seem to be pretty unbiased and seem to do a very good job reviewing the car. So I would highly recommend you to watch it, because ultimately, if you're investing in something, you should have a good feel, an internal feel of the company, I feel. And you need to see how the car is. What's the feeling of an average human being when she or he drives the car? And I found in all of those 3 videos that they were pretty delighted with how the Xpeng was performing as a car. So that already affirms to me as an investor that if the product is good, like 50 or 60% of the company's success is already ensured. Like half the battle is won over there if you just have a very good product. And I think Tesla and Xpeng, like their cars are fundamentally different and fundamentally better than the usual, than the current internal combustion engine automobiles that we have. So I would highly recommend, even if you can't watch the whole video, like watch at least the first 5 minutes of these product reviews about Xpeng, because they'll give you a very good, just a feel of the company and a feel of what you're investing into. Now, this I think is the most important reason why like Xpeng is sort of prized to win, is because in industries like EVs, or like very heavy software as a service sort of industries, your R&D spending is essentially what's going to make you different and what's essentially going to provide you that competitive moat, right? We talk about competitive moat all the time. We talk about competitive advantages all the time, but we don't often realize how that's coming about in the first place. And high research and development spending, you're spending on innovation, you're creating newer patents, you're consistently differentiating yourself. That I think is a much more robust indicator of how well a company is going to do. Um, so, for example, Xpeng grew its R&D expenditure 46% year on year, like 2019 compared to 2020, whereas Neo's R&D spending contracted by 42%. And I'll link the article in the description as well, where I've taken this point from. Similarly, they're also investing heavily in their ancillary infrastructure. So just look at these growth numbers, right? It's insane. So the number of supercharging stations was 159 by the end of 2020, and in their earnings call, they're estimating that this will reach 500. So that's a 3 times increase of their supercharging stations, and they're going to be covering more and more cities. Similarly, if you look at the number of sales stores that these guys have, it's going to go up from about 160 to about 300, which I think is pretty insane. And it just shows how serious, how aggressive, and how focused they are in expanding their ancillary infrastructure. Because if you want to displace the internal combustion engine, you need to build up the ancillary infrastructure, which incentivizes the customer more and more to come and try out an electronic vehicle in the first place. Secondly, I think how their previous R&D is paying off right now is in terms of, I think, the lithium iron phosphate battery, which they just introduced in their cars. And I think this, as they say, is going to reduce costs by around 20%, and that will raise profit margins automatically. and that will ensure that a company has more free cash flow. So free cash flow is basically return on capital minus cost of capital, and the free cash flow that the company gets, it can keep reinvesting within itself in its R&D and keep growing and growing. So I love companies that have a lot of free cash flow and that are aggressively going long term and aggressively spending in R&D rather than being short term focused and like focusing on profits, especially in their initial years when they're growing, right? Another important point I think is how well their software products, how their navigation guided pilot, and how their AI powered voice command system internally, like inside the car, have very high utilization rates. So like 90% of customers are using the AI powered system like within the car, like how Siri is for the Apple, right? Like in very simplistic terms, obviously. It's like the 90% of Xpunk's customers are using that AI powered voice command system, which I think just adds to customer delight in ways that we could never think cars could do or automobiles could do. Similarly, the navigation guided pilot has a 50% utilization rate, which 50, you may think like, oh, 50% is not that big a number, but um, the fact that 50% of Xpunk's customers are willing to let the car take control of driving is, I think, a fundamentally powerful point that needs to be appreciated. So just imagine, just visualize yourself driving a car, and then you're trusting the software enough that you're letting go of control, and you're trusting the software to make better decisions than you in terms of driving the car. So 50% of customers who have the navigation guided pilot um, are really using it on an everyday basis. So these signs are, I think, extremely healthy. And these are quantitative metrics, right? These are not narrative points, or these are not like stories or beliefs. These are concrete things which are happening on the ground. So this gives me a lot of optimism about Xpeng. Now, this is another point in terms of macroeconomic factors that I think are very underappreciated and people don't realize these mega trends, is that um, the Chinese government recently, if you would have read, said that we're not going to allow Tesla in sensitive sectors or like in the military and so on and so forth, because obviously Tesla being a US based company, the Chinese government will have their suspicions, right? Which means that the Chinese government will rely on their own homemade electronic vehicle brands. And why I think Xpeng is poised for that is because if you just Google, right, like Chinese city police Xpeng, you'll find that a lot of Chinese cities, like their police departments, are using Xpeng cars. You'll find the Xpeng car with the logo of their police department. And I think that in itself is like a pretty big customer base that Xpeng already has. And because it's already building a relationship with the government in this way, the government will tend to back Xpeng more and more by providing it more subsidies, by investing in it directly. And we've seen local Chinese governments investing directly in Xpeng, which I think is an extremely powerful point. And because of the China-US Cold War that we're seeing right now, the Chinese government will back and will want its own homegrown companies to take the lead in a sector like electronic vehicles. So how Japan in the 80s and 90s, through the ministry, through their MITI ministry, like I think it's the Ministry of Interior, Trade and Industry, like how it promoted Honda, Toyota, Suzuki, its homegrown automobile brands to dominate the world and to ensure that their macroeconomy is taken care of. I think China is going to do the same, where it's going to really aggressively push their homegrown companies to take the lead in electronic vehicles, which is the industry of the future. Um, so I really feel China, the government in itself is going to push Xpeng a lot, and Xpeng cars are exempt from purchase taxes by their own local ministries. And I don't think this is the case for like a host of other electronic vehicle brands. Similarly, like this is something of my own interest. Like I've been trained in economics, and I love macroeconomics especially. So if you read a lot of papers, if you read a lot of academic literature, they always say that low interest rate cycles like the one we're in currently, because of like COVID happening and central banks cutting interest rates across the board, low interest rate cycles always help industries like automobiles, housing, cheap credit, and so on and so forth. So I think you're going to see an automobile boom in the next 5 and 6 years that's secular in nature, and that's going to immensely expand the market. So a lot of people who are not in the middle class or who are in the lower middle class are going to be able to afford better and better cars and more cars for their family. So a low interest rate cycle is really good for automobiles. The Chinese government is backing it. Chinese police are already using the Xpeng. So I think these factors in and of themselves can like really provide good tailwinds for Xpeng. And another thing is, um, this is like the more Tom, Dick, and Harry criteria where I feel you should it's a matter of great confidence for me if like big people or like big investors are backing a company. So I did some research on their CEO, on their top management, and they seem to be people who really know their stuff and who are really competent and are essentially software engineers, and they're not like automobile engineers. So they're building a car on top of a core software. And similarly, there are other big shareholders are Alibaba. You have the Chinese local governments investing in it. You have a lot of Chinese state-owned banks lending to this company. So I think because it's also backed by very big names, it's good that there's incentive alignment, say between a long-term retail investor and long-term investors in that stock who back the company in the very first place. Now, one point I'd like to make is also about the export potential that Xpeng has, and I think this is a very underappreciated point again, which is not spoken a lot in the conventional media or like in a lot of like investor newsletters. Is Xpeng is really aggressively going after the export market. So compared to Neo or Li Auto or BYD, I think Tesla and Xpeng are the only ones that are going offshore and going after continental Europe and Asia and even South America. I feel I've read some news reports where they're going aggressively and exporting their cars because they know that they have the lead currently, and it's basically a numbers game, and it's basically whoever reaches there first or maybe second is able to dominate the market. So Xpeng has already shipped its vehicles to Norway, and if you follow the Reddit group on Xpeng, you'll also find that people have seen Xpeng cars in London and in the UK, where I think they're piloting their cars. So that just really shows that you're really going after the export market. And one thing you should keep in mind is all the legacy auto players, right? Volkswagen, Toyota, Honda, Suzuki have really benefited from exporting. They get more of their revenues from exports other than their internal markets. Volkswagen, the German behemoth, is exporting cars in India, in China, in the United States, and it's making a lot of money. So companies that are able to build export networks, that are able to already capture the imagination of the international consumer, are just going to be more trusted and are going to be, and they're also going to get better data because you have data from different countries, so their AI software becomes smarter in a more multi-dimensional sense. Now, one sort of like last towards the end of like my presentation, like this is a point I'd like to make, and like so one thing that investors like you would already know is that stock markets are essentially leading predictors of what's going to happen in the future. So a very crude way to think about it is what we see the stock market doing currently in terms of price movements is how the stock market is predicting what's happening, say 1 or 2 years down the line. So today is like the 21st of March, and I think like last month or so there was a very heavy tech sell off because of rising bond yields, and like a lot of um, a lot of companies were like their stock prices really corrected by 30 or 40%. So what I want to show you over here is I'll compare four electronic vehicle companies apart from Tesla, and sort of try to observe what's happening in their price pattern and see what is the information that the market is giving to me as an investor through the price movement of these companies. And what you'll find is the market is predicting that Xpeng has a safer and better future, and we'll try to observe the share price pattern. So if you see these four companies, so I have Xpeng, I have Li Auto, I have BYD, and I have Neo. What you see is Xpeng is the only company that has almost it corrected heavily from 38 $39 to about $26, and then it's bounced back. Whereas BYD and NEO especially haven't been able to bounce back and are still in fact going down. Only Li Auto has been able to bounce back, but it's not bounced back to it's like it's gone from 28 to about 21, and then it's come back to about 26.5 or something, whereas Xpeng has come back from like 38 to 24 to 37 point something. So the market is essentially telling you as an investor that amongst these four companies, Xpeng has the brighter and safer future. Whereas BYD and NEO, their share prices haven't come back, or there's not enough investor appetite to buy these stocks. And especially BYD, where if you bought at 30, you're still stuck at 24, 23, right? So these share price patterns really tell us how the market is predicting the future. And the market is essentially telling us the wisdom of the crowd. And the wisdom of the crowd is really powerful as a concept, where, if a large crowd is telling you, is giving you some information, it's likely to be very accurate because they're incorporating a lot of different pieces of information in that price. So this is something I wanted to point out, that I found like a very interesting analysis. Now, some risks that I'd like to highlight, right? Like, not everything is rosy with like every company. Is firstly because the electronic vehicle space in China is really, really heating up. There is going to be competition, no doubt. But I don't think this is that much of a worry because it's a smart electronic vehicle, whereas others are more conventional automobile companies that are just doing electric at the side. And it already has a very enhanced lead in terms of its software, um, in terms of like its export markets and so on and so forth. So I don't see this competition being very threatening. And this is similar to like what happened in the 1900s and in the 1920s, where you had Ford and you also had a bunch of like other automobile companies, and Ford eventually like became the number one because it had product differentiation. It had a host of other uncorrelated factors which acted as tailwinds for itself. The second risk that I personally think is the biggest is in terms of like how good is their software. There have been reports of like Xpeng stealing software from Tesla, which I don't think is a good sign, because it just shows that maybe Xpeng's engineering teams and their software teams are not as talented or is not as creative or innovative as say Tesla. And I think maybe it may make sense like check their LinkedIn or something, I don't know, to see like what how talented or whatever, like how qualified are the software engineers. But this is something I'll be keenly looking out for, is how, what commentary are they giving about their software and about their internal R&D capabilities in like purely software. The third risk I see is proper execution in its export market. So it's not just necessary and sufficient that you say that you're going to export and that's it. You have to successfully execute and deliver cars in your export market. So this is something I'll also be looking out for with a hawkeye. And the fourth, I think, is a more sort of structural problem with Chinese companies in general, is that if today you are a Chinese company and you're doing business outside of China, um, countries are going to look at you with suspicion from the very get-go. And this is what happened with Huawei, right? Like, Huawei, great company, has lots of patents, is doing cutting edge innovation in telecom and in the internet, in 5G and all of that. But the United Kingdom or the US or other markets, even India, like my home country, like their governments are looking at Huawei with suspicion. So this is something that Xpeng can also suffer from, because it's a Chinese company inherently, where companies may say, oh, like your cars are like gathering so much data on our country's like automobile patterns and our road intelligence, and you have so many cameras and sensors in your cars, you're connected to the internet, you have such a powerful AI software, are you maybe doing some surveillance, and is there a national security threat to our company, to sorry our country from your company? And this is something where, like, very recently, how the Chinese government was telling that Tesla may be a national security threat for them because it may spy in like sensitive locations in sensitive industries. Xpeng may be on the receiving end too. But one thing that gives me solace from this is that Xpeng is listed in the New York Stock Exchange. So it already has a very global and multinational feel to it. So I think and because it's backed by such big names, I think all of these top level geopolitical risks can be taken care of because they're backed by such big names and because the might of the Chinese government will also be behind them because the Chinese government will want Xpeng to succeed in other markets. Now, one last slide is just a back of the envelope valuation, where I just broadly want to like talk about how I'm thinking about this stock in terms of numbers. So, the size of the Chinese car market today in 2020 is about 25 million units. And the Chinese government has targeted that by 2025, 25% of all vehicles in China should be electronic. And from my experience and like from what I've been reading usually and following China over the years, like they're pretty bang on with their targets. If they say like they're gonna achieve a certain target, they do achieve it because their government machinery is just so their bureaucracy is that much efficient. Um, so even if like instead of 25% they achieve 20% of that, so 20% of all vehicles in China are electronic by 2025, that makes for about uh, 5 million units. So 5 million units are going to be electronic vehicles like sold every year in China by 2025. And let's say that Xpeng takes just a 15% share, like not like 20 or 25 or 30. Let's say it just takes 15%, which I think is pretty reasonable for how good its product is and like how ahead they already are, and because they're a smart electronic vehicle. Um, so 15% multiplied by 5 million units gives me 750,000 units. Um, let's multiply 750,000 with $25,000, which is their average price, which is the current average price of its car. And like, I'm being very sort of conservative here. I'd say like um, down the line, it may increase its price or it may really reduce its price because battery costs are going down exponentially according to Wright's law, and it's something that Kathy Wood also talks about. So let's take in like an upper bound for here for a moment. So 750,000 multiplied by $25,000 is an yearly sales of 18 billion. And over here, I'm not taking export numbers at all into consideration. I'm being very, very conservative. So maybe the decrease in price from 25,000 to like whatever can be offset by the high export numbers or like it or because it's just rolling out newer and newer models every year. But it's safe to say that by 2025 we can expect Xpeng to like do $18 billion in sales. Now their current price multiple is 20 times sales, so 18 billion multiplied by 20 is 360 billion. So I mean, honestly, what I feel is that by 2025 or 2026, we may see the market cap of Xpeng shooting to 350 or 400 billion. Like I think it's a very achievable number given that they're also an artificial intelligence company. They're not just an automobile company, so they may command a premium. And just very like crude sales numbers show that by 2025, their market cap can be like somewhere around 3 to 400 billion, and their current market cap is about 30 billion. So that shows that there is tremendous runway for this company in terms of its stock price appreciation. And that's exactly what happened to Tesla as well, right? Like we know in the last year in 2020, Tesla stock price really shot up by a lot. Like I think it probably like tripled or quadrupled or pentupled or something. But um, uh, and I'm saying this is very possible for Xpeng as well because the market just has to realize in time that their sales are going to be 15 or 18 or 20 billion dollars, and even their current valuations will ensure that you have 3 to 400 billion dollars in market cap. So this is like a back of the envelope valuation. So yeah, I mean, thank you so much for this. I hope you enjoyed this video. If you have any feedback, like you can always shoot me an email in the email ID provided below, and like if you want to provide like any monetary support, that'll be great as well. Like it'll just provide me with more and more energy and enthusiasm to like keep making more such videos. And I hope that you see my YouTube channel again and again, and that you enjoyed the content. Um, Once again, though, I'd like to point out that this is not investment advice. I am not a registered financial or investment advisor, and you should do your own research. This is basically for educational purposes, and I do hold this stock at the time of creating this presentation. So I hope you like this video, and please provide any feedback, or if you think I could have pointed out anything else. And yeah, thank you so much. Look forward to seeing you more.